It's been 2 weeks since we last covered Cardano on the channel, and since then, perhaps unsurprisingly, it's rallied. And the reason I say unsurprisingly is because we had this huge, cataclysmic, end of the world sell-off where we were trading at $1.20, $1.30 highs, only to drop down to 50 cents in the space of a month, with the majority of the bad price action happening these 2 weeks, January 27th and February 3rd. Again, we spoke about this possibility on the channel a few months ago, and if you've watched my content before, you'll know that I compare what we're currently going through here, this cycle, to the previous cycle very heavily. I think they're almost verbatim the same so far, from the percentage moves that we got, from the types of highs that we got the double top high, all happening before the halving. We got the kind of low and second low. Here we got the same thing, even though we didn't have a big COVID event, but it took the same amount of time for us to get this rally up. We started rallying up during the same time frame, measuring from the start here. There have been a few differences, like how we haven't revisited this low. Last cycle, we came down and visited this low after the COVID sell-off. And my rationale was that basically this was before we got COVID and we came down close to these lows, but not quite. And we had a rally and then we had the COVID sell-off that brought us lower. Here, this cycle, we came down to the same orange point, roughly the same percentage above this blue support that we moved up from initially. And then instead of getting the COVID sell-off that brought us down, nothing happened. So we just spent these 12, 13 weeks doing nothing, and then we get our rally. Whereas, of course, if we zoom in back on last cycle, we got 12 weeks of extreme volatility, basically, before moving into this rally, this kind of pre-post-halving rally. After that rally, we put in a top that lines up with just basically an ascending resistance line from the previous highs. We got the same thing here, lined up with an ascending resistance line from the previous highs, and then we got a retracement and put in a low. And note that retracement took about 12 weeks. If we go back here, we can see it took 18 weeks for us to rally, but if we check how long it was between the top and the bottom, it was about 9 weeks, very similar time frame. And the reason this 12 weeks is important is because throughout Cardano's price history, it often sees these double tops, and the time difference between these double tops is, would you guess it, 12 weeks. So again, we saw that here, 11, 12 weeks for this first double top, and it occurs specifically for this higher high pattern that we get. So we get a first high, a retracement, and then technically a higher high, happens over 12 weeks. Here we got the same thing. First high was low, second high was higher, took 12 weeks. We got it again at the start of 2024, or technically the end of 2023. We got this first high, came back down, put in a second high over the course of 12 weeks. And in one of our previous videos, we discussed, could we expect 12 weeks? Could we expect a rally after 12 weeks? Or could it be 18, like we saw here, back after the halving? When we got this high, it took us 18 weeks to rally back above this previous high. And I kind of personally came to the conclusion that it's most likely going to be 18 weeks, not the 12 that we've seen throughout Cardano's history. So for me, that's what I'm holding out for. I'm giving Cardano a buffer of 18 weeks here, since the high we got back at the end of 2024, the December highs. And if you do bring us 18 weeks forward, we could potentially be above this previous high at the beginning of April. We can see here, this end is at the start of April, first week of April. We could potentially be above. So that is a very quick summary of why I think what we're currently experiencing is extremely similar to what we've experienced before. Let me prefix this really quickly. Just because we've seen it play out almost the exact same way so far, does not mean or guarantee in any way that it's going to continue to do what it's done. And I think for me, it's been useful. I've looked at this chart. I've made trades around comparing these two similar timeframes with Cardano, and it's done me well. And I will probably continue to do very small trades based off these charts until it no longer works or there is a very clear break from the pattern. So far, in my opinion, we haven't had that break. And we even looked very briefly about, it was 9 weeks from here to when we got this low. If we take a look at how long it's been from the top since we got this low, it's a pretty similar time frame, bang on 9 weeks. Like, the similarities are very eerie in a lot of different ways. And you could, you'd never know for sure, but you could argue if we didn't have this COVID sell-off, we would have seen the exact same thing. I think that probably would have been the case where we just got nothing for those 12, 13 weeks, and then we got this rally. So with that said, what can we like expect from Cardano in the short, medium, and long-term future. That's the whole point of watching this video. There's no point knowing about what Cardano has done if we can't try and use that to our advantage in predicting what it will do. And if you haven't watched any of my stuff before, I'm a big believer in diminishing returns. I think that is just the natural course any asset follows. I think the longer something is around and the longer it grows, the slower it will grow. And I don't think that's too crazy to say, but a lot of people don't like to hear that. But I'm going to make my case for you today, and you can choose to agree with me or disagree with me. To be honest with you, it makes no difference whether you agree or not. This is just supposed to be helpful. So first of all, we're going to go back to the previous cycle, and we're going to look at this blue support line that was very crucial last cycle. We can see it was about 2 cents, close to 3 cents, somewhere in the middle. And if we measure this low, this resistance, this blue support, not resistance, sorry, I'm tweaking. If we measure this to the high of the previous cycle, so the previous high, and at the time, the previous all-time high, and not the previous cycle high, sorry, that cycle high, we get 4,800-ish% of a move. Depending on where you want to measure this from, it can vary. If you want to measure it from the close to the low, I've done that the wrong way around. If you want to measure from this resistance to the close, you get like 3,600. You can measure it a whole different ways. I might just call it 4,000 just to meet in the middle and please everybody. At that point, that's a huge percentage move anyway. It doesn't really matter. Basically, it's a lot of money. 4,000% of a move, give or take. And now I want to quickly measure how much we'd have to move up from this blue support to get back to the previous high, which coincidentally, or not coincidentally, is the all-time high, or at least the current all-time high for Cardano. If we take, again, moving from this blue to the very tippity top, we get about 1,100% of a move. Now you can see this is a reduction in volatility in terms of percentage. Cardano has moved less within this time frame. So if we take this as the minimum value, this is the maximum value, the range that it is operated in is smaller than the previous min and max value. It's shrunk, its volatility has shrunk. And I look at this as kind of a good thing. It shows that the asset is potentially stabilizing while still returning, mental performance. You're still getting 1,000% of a move here. But I just want to point that out. In my opinion, these are basically the same, these moves here. And what came before it are very similar as well. So I think measuring these two differences, these percentage moves over the same amount of time during similar time periods, I think is definitely a reasonable comparison to make. And I think it does illustrate the point that gains diminish, and specifically volatility diminishes over time, over cycles. We see this with Ethereum, we see it with Bitcoin, we see it with everything that isn't a stable coin. So, okay, we're getting around something over a quarter, but less than a third of the previous cycle's volatility. If we perhaps measure from a different point, if we take this low after the peak that we've just had. So the most recent data point, you could argue, that we currently have this cycle. We'll go back to the first cycle first, and we'll measure from this low. I'm just going to take from the close to the close. We get a 1,000% move. If you want to take from the low to the kind of the wick to wick, you get 1,600% of a move. Bit of a difference there. Whatever. 1,000% move from close to close. 1,600% move from wick to wick. Let's take a look at these stats this cycle. So from close to close, we're getting 225% of a move. That's just under a quarter. It's actually slap bang in the middle between a quarter and a fifth of the volatility that we got last cycle. And if you want to take it from wick to wick, we get 500% of a move. The previous cycle, we got 1,600% of a move from wick to wick. That puts you between 1/4 and 1/3 percentage of the volatility. What we saw very similarly from this low to the previous high. I just want to check actually very quickly if I actually measured that right from close to close. No, I was being very dumb. I was reading this instead of the actual percentage. We got 330%, bang on a third of the 1,000% that we got here. So again, just to go over that, from measuring the close to the close, we get a third of what we got previous cycle here, where we measured from the close to the close and got about 1,000%. Here we got 33. So as the cycle has gone on, measuring from multiple different points, we can see the volatility has diminished by about 1/3 and 1/4. So using this information and assuming that it will remain true, that the trend will continue, that we will continue to follow this pattern, if we measure from the low that we got last cycle to the high, and we'll go wick to wick first, you can see we get 4,000% of a move, rounding, and accounting for human error because I haven't quite got to this low, blah, 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 4,000% of a move. If we then assume that we're going to get 4,000% of a move from this low, wick to wick, that would bring you way high up. But of course, realistically, we're not going to get 4,000% of a move. We're going to get somewhere between 1/3 and 1/4 of what we got last cycle. So if we get 1/4 and we get 1,000% of a move, that brings you up to the high $5, somewhere close to $6 maybe. And if we get 1/3, that could bring you way above, close to $10. I don't know if you can see that, but I shouldn't. I just clicked out of it because I'm daft. I'll move it up anyway. 130% gives you $7, $8, excuse me, not $10. What's interesting about this point, and is perhaps a bit monkey brain, very simple, is if you go out of the logarithmic chart and you draw a very simple line from the highs, it does almost line up basically perfect. It puts you around basically $5-ish by mid-year this year. If you think we're going to get the peak towards the end of the year, it would give you basically $5. So it is interesting, and that is basically just because this peak was about $1, a bit over $1, a bit over $1. This was around $3. You know, if this one's $5, you're basically +2 every cycle. Obviously, that's not going to continue forever, and it would be very foolish, in my opinion, to base your whole analysis off +2 every cycle, bro. Trust me. But I think what we've talked about literally just now is also a valid reason to assume that we could get up too close to somewhere like $5. I do want to also say before we move on to BTC that I think this low that we've probably got here, I think that's the worst out of the way now. I think, again, even if we don't follow this to an exact T, I don't think we're going to trade much lower. I think this is kind of the last shakeout. If many of you haven't been through a crypto bull run or bear run before, if you're just joining now, or perhaps you were here for 2021, but you were here towards the end of 2021, during a bull run, you do get quite a lot of these severe corrections. You know, where you do drop like 50%. And you hear people talk about it. Like, I remember when I first kind of got into crypto, and I didn't even really know about Cardano at the time, to be honest with you. But it was close to 2018, and I watched the prices of Bitcoin and stuff. Bitcoin less so, but altcoins got corrections of literally 50-60%. And I remember people saying it. I remember hearing it on big channels because I'd watch videos, and they'd say, you know, it's not always up. There are these strong corrections. And I kind of wouldn't believe it because I'd see the price go up crazy. And I'm like, even if it does drop 50%, it's nothing, you know what I mean? You know, you're still up loads already. But when it actually happens, it rocks your whole world. And you kind of think, oh, fuck, this is the end. Bear run incoming. There was never going to be an alt season. And that's exactly what we've seen. We saw, like, the hype around crypto here was huge. And everyone was calling, yes, this is the bull run, $10 Cardano, $200,000 BTC next week. And then suddenly we got, like, this correction. And people were like, it's fine. This is those, you know, this is those drops that people talk about when we get bull runs. And then we went down to 50 cent. You know what I mean? So I'm just saying, you know, crypto has a way of really throwing the cold water in your face. And, you know, this comes as a shock as me. And I even called this move. You can go back 2 months on the channel and find a Cardano video where we talk about coming down to these lows. And I can literally quote myself from that video being, we could expect something greater than a 50% drop. And in that video, I did say, being totally honest with you, I was like, I don't know if we'll get that much of a drop. And that's exactly my point. I've been around crypto for so long, and I still was like, nah, we won't get that much of a drop. But then we got even worse of a drop. So my point is, even though we are in a bull run, even though we've seen Cardano do brilliant price action, it can still drop like a rock on a whim over anything. Doesn't even have to be anything for it to drop. It can just not feel like it and shave its price in half, give you a fire sale. That's why I would recommend not touching leverage, because even if you're longing, we would have made a killing if you timed it here, but realistically, none of us are timing shit. And you know, if you started longing at $1 Cardano, you'd be cooked. You would have been totally cooked here. So just, in my opinion, what I've always done is I've bought and I've held, and that's it. And it's done me well. So maybe it's famous last words, but I do think this serious correction here will be the last one we get before we have a rally. So what I'm saying is I think we'll rally up higher here. I think we'll get past this high before we potentially see any kind of serious correction again. And that's usually how it works in a bull run with crypto. Because you get these strong moves up, and then you get these strong moves down. And then it goes back up, and then it goes back down. And then at some point, the moves down outweigh the moves up. And then you move down even stronger. And the move up is even weaker. And then, it gets to the bottom, and the trend reverses. In very, very, very simple, smooth brain explanation. But anyway, rambled long enough on Cardano with the USD chart. Quick look at the BTC. Where I kind of think we're at with this comparison is here currently. I think what we got here will be similar to what we got here. We'll get here over the next month or two as well. I think like last cycle we dropped 70% here. So far we've dropped 60% here. This is after the peak, after the halving basically. This is also a lower high compared to the high that we got before the halving. So, Cardano is still below its 2023 high on its Bitcoin pair. It still hasn't managed to break above this yet. And I think it'll probably be another little while again before we do see it break above. But again, like on almost every single Bitcoin altcoin chart, when it does break above key levels, it's in a very short time frame. The move is usually explosive. Like we saw back in December where we had 3 weeks of crazy price action, and Cardano moved from 500 sats, 550 sats, up to 1,000 sats. It doubled in 3 weeks. Against Bitcoin, both of the assets were going up at the same time. We saw that with Cardano's price. It went from 30 cents to $1.20. Again, I think the reduced volatility is a factor to consider on the Bitcoin pair as well. I mean, we've technically seen that. If you measure these prices here, this was the high we got before the halving. It's at a lower price than previous cycle. If we measure the high that we got after the halving, it's at a lower price than what we got 2 months ago. It's a lower price. So we can see that almost the price is just slightly shrinking, but downwards almost. What is interesting is we also didn't return to these lows that I thought we would return to last cycle. So last cycle before the halving, we spent a good bit of time down at the 440 sat range. I was pretty confident, to be honest with you, we returned down to this price. Technically we didn't. We didn't come down to 440. We came down to 470. In my mind, I want to call that a win, but technically I was wrong. So we can see the volatility is shrinking. The range in which Cardano is operating within is shrinking, like on the US dollar chart, but maybe to lesser degree. So again, what can we expect? Last cycle was 23 weeks from this high before we started to have any kind of positive price action for Cardano, and it was 28 weeks when we broke above the previous high. So if we go again, we got this high end of last year, beginning of December. If you want to bring 23 weeks out to when we start seeing positive price action in relation to the previous cycle, that puts you mid-May when we get some kind of a strong move. If you want to go 28 weeks, when last cycle we overtook this high here, we broke above this high, 28 weeks, that's basically just another month, puts you mid-June. So potentially by mid-June we could see some kind of a reversion taking place on the Bitcoin Cardano pair. Again, looking at this move that we got last cycle, we broke above this level, rallied a bit higher, but then, we spent a good bit of time below this price before we then broke above it. And this was an extremely long bull run that we had last cycle. I don't know if we're going to get something like that. I think we could see something much similar to 2018 to 2017, where it was just kind of like 2 months of straight up crazy price action, catches everyone off guard, and then just as quickly loses half the value that it got in, 2 months. I think we're probably going to see something like this, which I think, to be honest with you, makes sense in a way that I think what we're seeing on this US dollar chart, first of all, is so eerily similar to what we're getting right now. Every bone in my body says it can't last much longer. This has to stop working because in a way it feels free. You know what I mean? I look at this and I go, I traded a few of these moves and all of them worked. And I'm not a great trader. And I'm not smart, I'm not good at trading. If I'm able to see this and make money off it, I feel like it can't last for long. I feel like someone much smarter than me is going to upscale this and trade off it until it's broken, until it doesn't work. And I feel like that has to be any day at this point. So I think not seeing this kind of a move and instead seeing this kind of a move will be the type of thing that breaks this pattern and catches a lot of people off guard. Because the more people that know about this, the more likely it is to change. And I think that change will be a sudden sharp move up instead of the kind of continuous march up that went on for a year, basically. I mean, it started at the beginning of 2020 and ended mid 2021, late 2021. I don't think we're going to see that again. I personally think we'll see something like this. But those are all just my opinions. Actually, not all of them are my opinions. Some of them are facts. A lot of it is facts, actually. Very few of this video has been my opinion. But there are opinions in there. Anyway, if you liked the video, leave a like. Helps out a lot. Give it a share. Show it to your mate. But actually, it's kind of in your interest not to share. Because like I was saying, the more people that know about this, the more unlikely it is to play out like it did last cycle. But do me a solid. I told you about it, so tell your mate. Go on. If you didn't like the video, that's fine. Leave a dislike. Tell me why I'm wrong. I'm always open to learn. And yeah, thanks so much, guys. Take care and peace.